following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show. I've been listening to you for years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always have a plan and believe in it. Nothing good happens by accident. Market-wise, let's take a look at it out here. We have the Dow Industrials up 125, NASDAQ up 24, S&P's up 10. Gold contract trading down $18.50 at $11.1740. Silver down 14 cents at $15.23 an ounce. Platinum down 12 at $9.65 an ounce. Copper up a penny and a half at $2.33 a pound. Light sweet crude up $1.73, trading out of $47.87 a barrel. Bonds 10-year down 8 ticks, 127.04. 30-year down a full point and 3 ticks, 154.21. King dollar up 247 ticks, trade at 97.28.5. The euro's down 53 at 109, and the yen's trading 121.01. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You got window dressing yesterday, today in spades, pushing it on price, no doubt. The SPY today has got to 211.66. Right now, you're at 211.28. Bottom line, it was going on after this swing point up here at the 210.59, the high of the S&Ps. So let's go back to the high of the S&Ps, period. So the high in the SPY right now is 213.78. We've made 211.66. You know, bottom line is that we're even going to have lighter volume than yesterday. Well, it's going to be about the same. Yesterday we did 75 million. What we're going to have out here today is probably we did 85 million yesterday. We're probably going to have about the same 85 million. That, folks, is dramatically lighter volume. That's the bottom line. But guess what? If it's holding on price, it's holding on price. We get over to the NDX 100. Well, let's go into the future market first. We take a look at the futures. So what we have in the futures, the S&Ps, you've got to 2110 today. You're at 2105. This would have to come back inside. Well, it's not that far actually. It's inside 2100 to be in the lower range. You know, we spiked up there, and we'll see where this shakes out coming into the close. We look at the NDX 100. NDX 100, we are at 115.19, and that is over all the highs, folks. That's bottom line. That's over the highs of July. The high of July is 114.39. You're almost a buck over it right now. Yeah, the volume's lighter. Bottom line is that we're over it. Until we go back underneath it, that's saying it can go to higher price. You're going to have a lot more equities come out. The biggest one that I suspect can move the NDX 100 is going to be Facebook. If we go into the futures, the NDX futures, what you have in the futures right now is this. We've hit 47.27. You're at 47.18. This would have to back into pretty dramatically. It'd have to come down another 18 points to come back into the lower range right now. Gold contract. Okay. Gold. What do we have with gold? Gold gets into a low today of 1113.60. We have done 141,000 contracts. That, folks, is coming into 190,000 contracts, and it hasn't reached the swing yet. The swing is 1103.80. bottom line, the market talks, walks, and swings. That being said, that gold is getting whacked like this and has got whacked since last Wednesday. We were at 1183 last Wednesday when the Fed meeting came out. We went from 1183 down to 1113. You can make the case that we can go back to October 15th and we're at 1191 and you're at 1117. Now, that being said, guess what? Continually, the gold equities refuse to back off. They not only refuse to back off, when you take a look at a few of these, they actually look like they're going to do an ABC structure on the way up. And you have, they wouldn't all be ABC structures, because I'm looking at Gold Corp right now. That came down on too much volume on Wednesday. A few of them came down with too much volume on Wednesday. A few of them did not, however. They're rejecting lower price out here today, which is just amazing, by the way, okay? Because what we have had is that, there's some price destruction inside the metal market. Now, an Eagle, guess what? Bottom line, this thing is setting up this rejected lower price today. So thus far, we've had 2 million shares going into 5.3 million. It rejected the low. This thing looks like it's setting up an ABC structure on the way up, and that could be an ABC up because on Wednesday, you didn't get down. Bottom line is that it couldn't even break a swing point. Today's the first day that we broke that lowest swing point. We did it with lighter volume. That's saying it wants higher price, which is just amazing, no doubt. Bond market. Well, here, let's go to the oil market next. We take a look at oil. Exxon Mobil, Chevron, they're doing ABC structures on the way up. The actual physical oil market, what we've done out here today, you get some juice under this market. We've done 395,000 contracts. That's saying we're at 47. It's going to make a run to that last swing high is 51.72. You go to Chevron, CVX. That took out the B point yesterday, took it out with volume. You get follow through today. You're at 98.44. That's a 100 as the A to B equals C to D. You talk about fast, furious, and a straight line move. This is a straight line move, no doubt. 86 to 100 probably in 7 days. Exxon Mobil, XOM, same type of setup in XOM. That was an ABC structure on the way up. Took out the B point yesterday. You follow through today. That price structure is at 87.21. 90 is the number. 90 is the A to B equals C to D. Now, what we are going to have inside the NDX 100, well, here, let's see what's moving the NDX 100 right now. So, inside the NDX 100, the leader out here is Green Mountain. That's up $3. And Green Mountain, that is a dead cat bounce extraordinaire. This is always a heads up, folks, as to what is moving markets. If you take a look at Green Mountain is the leader today in the NDX. Well, guess what? Green Mountain just went from $158 down to $50. You know, it's about time that it had some kind of a bounce. Number two inside the NDX 100, moving it into higher price out here today is Micron. Micron's up 86 cents at $17.95. You have Seagate Technology up $1.70 at 40.58, and Activision Blizzard is up $1.41 at 35.99. You stay there, folks. We'll be coming right back. Our phone number is 877-927-6648. Dow Industrials are up 131. Nasdaq's up 27. S&Ps are up 11. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow up 124, NASDAQ up 25, S&P's up 10. And as we do each and every Tuesday at 20 past the first hour, we have our man, Mr. Basil Chapman. Don't forget, folks, Basil does an outstanding show every trading day here, 11 to 12 Eastern Standard Time. Now, all the programming at TFNN, folks, on Tuesday and Thursday, we do 10 hours of live programming. It starts at 8 o'clock in the morning, goes to 6 o'clock at night. Monday, Wednesday, and Friday, 9 hours. Starts at 8 o'clock, goes to 5 o'clock at night. All of that you can get right on your cell phone. TFNN.mobi gets the audio. You want to get the video, just go to TFNN.com on your cell. Hit the right-hand side. You'll see Watch Tiger TV. You can get the audio plus the video. Basil also has a great newsletter, The Opening Call. The way you test drive it, come over to our website at TFNN, go to newsletters, trading newsletters. You can test drive The Opening Call right here, right now. 30 days, absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. So we're looking at Facebook, right?
Oh, we're looking at Facebook. We're looking at the Dow, but I certainly can look at Facebook.
That's so funny. FB, we're looking at the Dow. I love it. Okay. I get Facebook on the mind, man, for tomorrow. Okay.
Just because it's got a smiley face, I guess.
That's awesome. Okay. We're looking at the Dow Industrials.
We're looking at the Dow, and what's interesting about the Dow is that from the 15,370 level, we're actually up. We are only about 400 points away from the all-time high. And what's quite incredible about this is that this 9-period moving average, that maroon line, has just held every single time it's come back down, and now it's crossed the 200-period moving average. So this is what I'd say to subscribers this morning, that the stochastic is at 90, well, it was 94%, it's a tad lower right now.
Okay.
But what's interesting is that the MACD is still holding well. So the next left side resistance is now at 18,137. And that was the high of July the 20th. That's over there. So there's just been a steady move up. Now, I found this quite fascinating in that there are stocks that we've had as shorts. We actually added 2 shorts over the last couple of days, today and yesterday. But they are stocks that are quite important to me in terms of telling me about the auto parts area. One's in the auto parts, and the other one is in overalls and the service industry, basically.
Okay.
And they're both down. So the Dow is up 132 points, S&P is up almost 10, and these 2 stocks are down, and they've been leaders all the way. So I'm watching them really closely. So what we've decided to do is we've got we're still long General Motors, and we've got a peripheral that I think is part of this buying of automobiles and vehicles in general, and that's Sirius XM Holdings. It's at $4.14 right now. It's acting quite nicely. It's also holding the 9-period moving average. And the weekly chart, the only way I can chart it based on the Chapman Wave methodology is this is actually a brand new leg B in the monthly chart. That's the weekly chart still has a, I'm sorry, the monthly chart has a rectangle formation, which suggests it should go to a D. So if the autos are doing well, my thinking here is that some of the peripherals, like Sirius XM Satellite, which I think comes with many cars now, I suspect that it should do well. So it's really a participatory element to this whole industry. So I'm looking at the idea that new cars are selling very well. They seem to still be selling well. Ford came out with some nice earnings today.
Yeah.
And what's interesting is that I think that the auto parts might start to slow down. So that's kind of the way I'm looking at it. But definitely, we spoke about this the other day. It's a bifurcated market. It's becoming more and more select. You just spoken about Facebook, and Facebook certainly, in my thinking here, is that fund managers are going to gravitate to the best of the best, and Facebook is in that category in the NASDAQ social media. But it made a peak D in the Chapman Wave at 105.12 the other day on the 29th of October. It's kind of resting here. The MACD is starting to turn down. Stochastic's turning down. I've got an F/B in the weekly chart. So you are getting some stocks. And if you're looking at trend lines, there are a lot of the indices that have started to bump into an area that could be resistance. But what is interesting is the same way as I spoke about Siri going to a leg B, I have to consider that this is a brand new leg B in the weekly chart of the QQQ, the power shares, the NASDAQ power shares, which suggests to me that any sell-off, you've got very strong support between 111 to 109, which is the 109 is the 9-period moving average support in the weekly chart. So I think it's a little toppy right now, but if these charts break out in weeklies to new highs after that very sharp decline. I'm not sure who bought the QQQ at 84.74. Very lucky, whoever that was.
Yeah, seriously.
It must have been like 3 trades there or something.
Yeah,
but
there wasn't anything there.
I mean, that looked like a fake to move to the downside. But you know what's interesting is, if this has the same repercussions as that May, was it 2011 or 12?
2010.
2010, that sharp sell-off, and then that quick recovery, we might be looking at the same sort of thing here. So overall, I have to contend with the fact that most of the indices are indicating that the move that we've just had is a serious move, is a move in that makes the low of August. I'm not sure that we can go. I don't know what it would take to get us back down to that low, but I think that this is a situation where any very sharp sell-off should be looked at as a potential buying opportunity. But you need to do some homework, and you need to know that we are extended on the daily charts. But I'm looking at these weekly charts, and they have improved tremendously. So my bias right now is to consider that the indices or where I'd like to focus on any very sharp pullback, maybe a 6 or 7% pullback if we can get that. And some of the stocks are starting to break down. Some of them are just starting up. The heavy cyclicals like Alcoa and the steels are actually moving higher. And I think that that's a positive. So overall, my bias has become much more positive, but I am looking at some of the areas that have been very weak to maybe continue being weak.
And folks, you can come over to our website at TFNN, and as you're over it, bottom line is that you'll see right under newsletters. You hit newsletters, you can, excuse me, folks, you hit trading newsletters, you can see the opening call right there. You can, excuse me, folks, you can test drive Basil's newsletter, 30 days, absolutely free, and of course, every trading day, 11 to 12 Eastern Standard Time. You can just right on your cell phone, TFNN.mobi gets the audio. You want to get the video, just go to TFNN.com and hit the banner on the right-hand side. Yeah, it's going to be intriguing to watch how Facebook trades out tomorrow. If they come out with the numbers after the market tomorrow, And we'll see whether it can get that NASDAQ going up and over those highs, man.
You know, technically, there's reason to believe that Facebook should still do well. So it is, as you say, it's very important. It's how the next period looking out is perceived. So we'll see. It's not just the numbers that come out. It's how the market treats it one day later, and then we'll see what happens.
Yeah, and it's, you know, that can be the my take is it can make or break that NDX 100. You know, we'll find out, but you know, because you just got those 6 stocks, but those 6 stocks have been moving. That's
and they're moving. They are the fund managers' favorites at this point, right?
Yeah, they're all sheep, diving right over the cliff. Cooking, brother.
Okay,
have
Tom,
a great one, man.
much.
Have a safe
You
one.
too.
You stay right there, folks. We'll come right back. Dow Industrials right now up 118. Nasdaq's up 23. S&Ps are up 10.5. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now up $1.15. You get the Nasdaq up 17. S&Ps are up 10. It's going to be interesting here coming into this close, because what you do have is that this first little sell down inside the S&Ps, folks. And the S&Ps were certainly, there we go, ESC. We're driving this baby. They intraday, they just kept spiking higher, higher, and higher. What we have thus far is that you're at 2105.75. The high out there was the 2110 level. You get if we get into this 2100 level, bottom line is that's that's a sell-off into the close. We'll see how that does shake out. I suspect we'll find out. That's the easiest way to see where this thing does shake out. What we do still have, which is just amazing. Okay, so when you look at the indices, the indices are at highs, and if we go as to what equities are going up versus down, the bottom line is that the acceleration on the way down, percentage-wise, is still huge, which is just unbelievable. The big number out here today, well, you get a couple of them. One's Demandware. I've never heard of that stock, okay? But one that we've all heard of is Martin Marietta. That baby is down 9% out here, and that's just taking apart its lows. You have AMG Pharmaceutical, that's off 24%. You get Fidelity National Information off 12%. Dun & Bradstreet's down 6%. Red Robin is down 8%. Avis is down 12%. It's interesting. Sam Adams is still getting hit. That's down 2.54%. You get a couple other pharmaceuticals off 10 and 7%. Now, on the way up, what you have, let's see, Methanex is up 5.4%. Agrium, AGU. I want to look at this AGU because I have a feeling what you have happening out here is that AGU is that these commodities that have got hit. Yeah, this is nitrogen, potash. The ones that really have get hit, they're getting some juice in them. So this equity here has gone down from 116, hit a low in October of 86. Now that 86, check this out. So 86, you did 5.5 million. You're going into 6.7. Then you come off of this and you're pushing again with some juice here. So that almost looks like, that wants to go up to its higher swing, which is 98.05. Let's go to Mike in Toronto. Hey, Mike, what's going on?
Yeah, hi. Thanks for taking my call.
Sure.
IBB.
So you get the IBB.
Yeah, Celgene's earnings, have they come out this morning or after the close?
Let me see. CELG.
And Regeneron comes out tomorrow.
That's good. Let's see. So Celgene. Okay, Celgene's before the market on the 5th. So today's the 3rd, right, I think? Yeah, today's the 3rd. So that's going to be Thursday. Regeneron's tomorrow night after the close. So I would just let this, my take, this thing is bouncing, and it's almost got the juice in it. The closer that you can get into this, you're at 338 right now. Interesting.
It looks like it's failing, eh? Look at September 21st volume on the daily.
Oh yeah, no. Listen, I'm waiting for this bounce. This has got up here. There's no doubt. And what it does happen is this, folks, is that if you're going to trade this, you actually have to. You don't have to trade it yet because Celgene would be at the close of tomorrow, right? Is that what it? Let's see.
Yeah, but it's having its pre-earnings run.
Yeah, no, which is dynamite.
So buy the rumor, sell the news.
Yeah, no, listen, man, I get it. It's the IBB has been a great trading vehicle, and I guess 339, you hit 341. Realistically, yeah, if it closes 337.90. At 337.92. Yeah, if it closes right here, you can sell it right here.
You would declare it a failure.
Yeah. So this is what you have. When we came off the highs, folks, of September 21st, you came down from 359 to 337. You did that with 5.4 million. The ultimate here would be 337.56. And what that would be is this, Mike. You're going into the first downdraft, right? And you're rejecting the 337.56 price, and
right.
And you could get that before the close. We've hit, we're at 338.11. It's already, it looks like it's going to close under the highs of yesterday, which is 338.66. Mm-hmm. If I put this Yeah, you can get this because intraday at
the line in the sand is 337.56 because the volume is low.
Yeah, no, exactly, and that would be a rejection of price with dramatically lighter volume.
Okay, great. Thank you.
Cooking, brother. Have a great one, man. Have a safe one. And yeah, Tesla's coming out after the close. This is going to get really interesting watching this thing shake out. Tesla right now is down 244, trading at 211. They are going to come out with their numbers after the market close. And what you have with Tesla is this, folks. You have two separate high-volume swing lows. You have the high-volume swing low, August 24th, 195. High-volume swing low, October 20th at 202. So probability, that's where it wants to get into. Now, we'll bring this back a little bit further. Put it on a weekly. I'm going to put it on a 2-year weekly. The same setup as there. You know, let me actually put it on a 3-year weekly. This has been in a consolidation since, it's been in this consolidation since all year, February of 2014. February 7th of 2014, we're at 186.63, and the highs of this consolidation are 291, and the lows are 197. So this is a big day for Tesla. You know, the way this is set up, it looks to me like we're going after 195. If you break 195, by the way, right, you can get 132 in about a heartbeat, which would be really pretty heavy. No doubt about that. Big time. Big time. Now this is going to be big time going into this close. If you get a failure out here, let's see, you get enough time. You get 21 minutes coming into the close. And the S&Ps don't need that much to 4 more points. 4 points in the S&Ps, and you got a failure. The volume, okay, we know the volume yesterday was anemic. The volume today is going to be just as anemic. Right now, we've only done 662 million on the NYSE versus 868 yesterday. And remember that 868 was going against 1.1 and 1.2 billion. Inside the NASDAQ composite, what we have is they do 1.675 billion. That's going to do a 1.8, but that 1.8 is going against a 2.2 billion share price. If we go over and we take a look at this E-mini for a second. So, yeah, you get it's not going to take much here. It takes 4 more points, 4.5 points, and you're inside the lower range. And we have hit, when we hit that high out here, it was 26,000 contracts, and we just did 25,000 contracts, and that was in 7 minutes. We're going to be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is up 99. Nasdaq's up 18. S&Ps are up 7.5. And it's making its way down there, folks. What a game this is, man. I'm telling you. It's just wild. We're 2103.50. As one of our Tigers just gave us this heads up, there's no doubt. Inside the small caps, right, the IWM folks, bottom line, it has taken a serious long period of time to get up to the 17th of September. That number is 118.89. Guess what? We got there. It's going to fail on price, on volume. Done 24 million versus 50 million. Big number. Let's go to John in Philly. Hey, John, what's going on?
Hey, Tommy. Thanks for taking the call. How are you?
Absolutely. I'm doing great, man. How you been?
Very good, thanks. Tommy, haven't asked you for this for a while. Could you pull up the monthly chart on GLD?
Yep. Let's take a look at it.
Specifically, what I'd like to ask you to or to address your thoughts on this feature on that chart. The monthly bars the past couple of months, including the July low, relative to the December 2009 high bar. Does that tell us anything in your opinion?
Yeah, so check this out, folks. This is pretty cool. So that if you happen to be watching Tiger TV, you're going to see it. If you're not, I'm going to explain what we're looking at, okay? So in 2009, folks, in November, we did 403 million shares. That bottom there was 103. And then in December, we did 570 million. That bottom there was 105. Well, we came back. The first time we came back to that was in July. July, we came back with 157 million. So the correlation is 157 million versus 400 million and 500 million. Bottom line, now I'm going to fast forward on you, John, all right? Because inside the gold report, this is what I have. And if you want to test drive the gold report, folks, it's out here today. This is a great day to test drive it. What you're going to see is this, is that my take on what gold has done right here is this. Now, this is really deviant. And what it is that when gold was getting trashed, which it has for, about 4 years now, okay? When we took the biggest trash in the last 6 months was on the 21st, the 20th of July. We came down 15.7 million shares. Now, the high of that level is 106.62. That's the first part. Now, watch the second part, because this is really cool. So that's your downdraft. Then all of a sudden, you tested that with lighter volume. We tested that down there with 11 million versus the 15. Then you had a sign of strength. First sign of strength we had in gold was August 12th. You go topside, and we do 10 million. Well, what we're doing out here today, folks, is this. You got to a price point of 106.68. It's rejected that level. We've done 6 million shares. The correlation goes like this. 6 million versus 10 million of your sign of strength. That low there is 106.93 versus, and this is the kicker, the 106.65, and that's the number, because when that was the flush out in the gold market, and it looks to me, Z, what's going on here is that because come down, price destruction, no doubt. We've got price destruction in the gold market, but you don't have price destruction in the equities, and I think this is it, man. I think this is the test. And right today, that test is successful. It went down there, it rejected lower price, has lighter volume, and has gone topside. In fact, I know you're looking at some of these gold stocks. Some of these gold stocks, folks, are up, which is crazy. So I think we got action, man.
Tommy, thanks so much.
Hey, listen, I think I saw you in the den. I think we get action on natural gas too, and I want to thank Dave from Clearwater from calling this morning. And I just saw you coming across out there. It's going to be interesting on natural gas also, man. I'll just one tidbit for you on that market. That market, of course, has collapsed, and the most violent rallies one ever sees are short covering rallies. And we've got a market that's ripe for just that. Well, that's a beautiful thing, man. I'm finally on the long side of something.
Thanks. Bye now.
Okay, man. Have a great one. Have a safe one. Market-wise out here, folks, we'll see where this baby is shaking out. But you got 14 minutes, and they want to sell this thing down. You know, if we go over and we go into those S&Ps again, this always blows my mind how this works, man. Okay, so... yeah, it's going to be a close call, man. They can bring it right into it. What you will see is this, folks, okay? Anyone that's been in the market for a long period of time, meaning the large operators, they're going to try to hold this above 2,100 as much as they can. Because, you know, it's not that you have to be a technician to understand, you know, what breakouts are. Fundamentalists understand what a breakout is also. The further that you get away from a zone, the more probable is that you can go much higher or much lower. Now, what has happened here in the last 10 minutes is that you do have an expansion of volume and price on the way down. You know, 10 minutes ago, we did 27,000 contracts on the way down. We've already done 33,000 contracts, and you get 3 more minutes left in this bar. Now, you know, you can say, hey, you're talking 10-minute bars. The bottom line, folks, is that whether you're doing a 10-minute, 30-minute, 60-minute, they all are robust and then work the same way. And so if you're going intraday, that's how you'd want to be looking at this and say, okay, how is this baby setting up? Is this setting up, you know, to get into lower price and to fail out here? Now, because what we have is this. You have window dressing. We know that. That was yesterday. That's today. Today's the last day of window dressing. We know we're up on lighter volume, so we know that that's distribution in spades. The bond market. The bond market, let's go over the bonds, because if, in fact, this is going to be hold, meaning you're going to pull back, the bond market, I'd still want to see it reject lower price. Now, what bonds have done is this. They haven't made it to their swing low. The swing low in bonds are 126.16. Today, we made it to 127.01. They're not moving much. I would much rather that I saw that reject the lows of today and move higher. We don't have that yet. You know, we'll see whether we're going to get that. What we do have inside the, let's go over to the dollar, because the dollar is going to be, our biggest risk inside the metals market is the dollar. There's no doubt, because the dollar is in a confirmed ABC structure on the way up. And what that means is this, is that when you take out a B point of an ABC structure on the way up or the way down, and you take it out with volume, your probability gets much higher that you're going to make the full price projection. Bottom line, we did that. Then what we did is we backed into the lower part of the range on the 28th, and we took off again. Yesterday, I tried to back in, but what's happening out here today is this. So check this out, man. This is pretty intense. Today, what you have is that we should have been able to stay over at 97.44 in a heartbeat, like not even close. Well, we haven't been able to do that. And the volume has contracted dramatically. So this is going to be wild watching this shake out if, in fact, it's going to try to get back inside 96, 92. You know, and we'll find out real quickly, you know, if, in fact, the dollar fails at that price. Because something you want to really wrap your head around is this. A failure on a technical sense inside the marketplace is one of the best trades, and it's the highest probability. The reason being is that we all go to one side, and a failure is huge, folks, okay? This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow right now is up 93. Nasdaq's up 16. S&P's are up 7.5. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have the Dow Industrials right now up 99, Nasdaq's up 18, S&Ps are up 7.5. And after the close out here, folks, we have a lot of numbers coming out. I mean, a lot of numbers. A couple of the big ones out here, of course, are going to be Tesla. Inside the gold market, I want to see what Heckler is doing out here. So if we pull up Heckler for a second. Now, we don't own Heckler right now. And the way that Heckler is trading, it's like, this is not a bad little setup. You've had, it's trading at $2.13. You had some strength out here up at 261. And this is one of the largest silver companies out there. It's been in business forever. In fact, it takes in it takes in 116 million per quarter. So we'll see where this thing shakes out. And most of the time, let me just see. Most of the time, they come out right after the close. Yeah, we'll see. We'll see how long it takes them to come out with the close. Most of the time, they do come out right away. Let me see. So Zillow, that's cool. Zillow's going to be coming out too. So Zillow's coming out after the close. Zillow right now is trading at $30.95. We put this back a bit. Now this is wild because Zillow is traded down from 51 makes a high volume swing low in August of 21. It's pulled back on some lighter volume. Zillow looks like it can move higher. So this will be interesting just for the amount of advertising that's going on inside the real estate market. You know, because Zillow, everything has to do with how much advertising is getting done by realtors inside that market. Because there's no doubt between Zillow and Trulia, you know, bottom line is that you can find anything and everything as fast as possible. You know, it's amazing. What blows my mind inside that business is that when people say to you that, you know, they're in the business, they say, oh, well, I can find as many listings as you want, you know, if you're looking for a house. It's like, well, you know, the whole world can, right? I mean, that's how this thing shakes out right now. Inside the Dow, you get a couple Dow stocks that they're selling off coming into that close. They haven't sold off the S&P yet, but it's real close. It's teetering. It's at 2101.75. They're going to do it. This is going to be a failure. They're going to bring this baby underneath. What a mind blower this is, man. I got to tell you. It's just, you know, markets are the same, folks, but they're always different. And when it's popping highs, you know, it's always popping highs if it's going to give it up on lighter volume. But I want to thank Tiger Terry in the den, and this is why. What I've found is this, is that what always seems to happen, and this is crazy, it's always, when you're looking at the Dow, the S&P, the NASDAQ, and the small caps, right? They're always, one's waiting for another. It's like they're all waiting for their buddies to go hit a swing point. That's real possible. What just happened here is that the Russell, the rest of the indices were waiting for the Russell to get up and hit the benchmark of this September 16th, 17th level. That's what it seems like. You know, the Russell itself, the indice get up, it hit the 1196, it's at 1192. That's going to be a failure. And that's where you have the harmony that comes inside the marketplace, you know. So it's going to be game on here after the close out here, because what we do have is that you have a large amount of equities that can move the market. Tomorrow, inside the NQs, though, is going to be, it's all going to be all about Facebook. You know, Facebook looks like, you know, it's selling off slightly. You're down 80 cents, and if we're at 102.51, if Facebook gets back inside that 100.16, that would be saying, hey, guess what? You very well could get into lower price. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming back with lots of numbers for you after the close, lots of earnings. Dow Industrials, well, the Dow Industrials are up 86, NASDAQ's up 15, S&Ps are up 6.5. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
I am having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Believe in the magic of tomorrow, and your spirits will be lifted on the wings of hope. Market-wise, let's take a look at it out here. Dow Industrial's up 89, Nasdaq up 17, S&P's up 7, gold contract down $18.50, traded at $1,117 an ounce. Silver down 14 cents at $15.26 an ounce. Platinum down 13 at $9.64 an ounce. Excuse me, folks. Copper up a penny and a half at $2.33 a pound. Light sweet crude up $1.79, $47.92 a barrel. Bonds 10-year down 7 ticks, 127.05. 30-year off a full point, 154.24. King dollar up 247 ticks at 97.25. The euro down 52, trading at 109, and the yen's trading at 120.99. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so the SPY closed out at 210.95. Bottom line, you take a look at this baby. You have light volume, but you're over highs. We got up to a price point today of 211.66. That 211.66 was overtaking the swing highs that were generated out here from August 18th. It looks like the 213 and 18, that's where it looks like it wants to get up to. As we expand up to these prices, folks, the volume is dying, and on the vine it's dying too, big time. The NDX 100, what do you have with the Qs? The NDX 100, the 3 Qs, they close out at a price point of 115.01. Bottom line, you're over all the highs on the Qs. The Qs would have to get back inside the high of July, and the high of July is 114.39. It's not like you're over a lot of, you're not over it by a huge amount. You're talking about 60 cents. But bottom line is that until you go back inside it, guess what? It wants to go higher. Gold contract. Now, this is where it's going to get really wild. So gold out here, folks, has get smoked since, well, actually, gold has got smoked even before the Fed announcement. The last run on gold, it started on October 2nd. We were at 11.03. We went from 11.03 on October 2nd. We hit a high of 11.91 on October 15th. Now, what we did here today, well, what we've done thus far, from that level, we came down, and we came down on lighter volume and correlation of how we went up. Today, what we did, they trashed gold, down 18 bucks. At one point, it was down $22. We did 144,000 contracts. Well, 144,000 is not enough to break it down. We haven't even got to the swing low yet. The swing low is 1103.80. We'll see whether we get down to that swing low. It has rejected that 1103 thus far. We got to 1113 out here today. We'll see whether it makes that run tomorrow down into those levels. The reason that I'm skeptical that it's going to make a run down into those levels is twofold. I'll bring up the dollar for a second. Now watch this. The dollar index, folks, is in a confirmed ABC structure on the way up. So what does that mean? That means that it took out its B point, took it out with volume, and it took it apart too, by the way. Okay, this is strong like bull. On the 22nd of October, the dollar went from 94, 98 up to 96. That's a monster move for the dollar, folks. You had volume behind that move. That move had 52,000 contracts. The following day, we followed up with 46,000. Then what it did, pull back with lighter volume. Then Fed day goes topside, takes it out with 47,000. Now, that's confirmed ABC up. You take out volume, your probability goes higher that you're going to get the full price projection. The full price projection is 1.00. The last swing high is up here, 98.74, which was generated August 7th. That being said, this is what the dollar did today. The dollar got over the high of Friday. The high of Friday is 97.44. We got to 97.57. It had 18,000 contracts in correlation to 41,000. That's pretty intense. So what this is set up is that now what the dollar is going to try to do is go back inside the lower range. And it dipped its head in there yesterday, and we'll see if, in fact, you get an expansion of volume. You know, can you have a failure of an ABC? Of course you can, okay? Bottom line, it can also just be a complex ABC. And what that would mean is that as you get back inside the range, you see the volume lighten up. If the volume doesn't lighten up, however, because what we've had out here today is this. You charge forward with dramatically lighter volume, and you failed on price. If you back down tomorrow and we see the volume expanding, that would set up a failure. That being said, what you do have is and this is where the divergence comes in inside the metals market. The gold equities, the silver equities, bottom line, have not got croaked like the actual metal has. And, you know, when you look at the larger aspect, you know, if this dollar wants to go to 1, well, that would be saying to me that, you know, this metal is going to get croaked more. And, in fact, what would happen is that the equities themselves could only take so much pressure, and then you'd have that sell-down pressure happening. But that divergence, we'll get that divergence. The market will get that divergence straightened out in the next, I suspect, the next few days. Tesla, TSLA. Tesla come out with numbers out here. So Tesla, you're going to love this one. This is perfect, folks. Tesla lost money. They lost more than they were supposed to lose. Bottom line, market loves it. Tesla closed at 208. It's trading at 225. And here's the numbers on Tesla. And as our man, Mr. Dave White, saying, TSLA, there is a large short position. It's a 27% short position. Tesla was estimated to lose 56 cents. They lost 58 cents. Their revenue, they came in with the exact revenue. Their estimated revenue was $1.24 billion. They came in with $1.24 billion. Their Model S orders did rise more than 50%. The deliveries for the year, 50,000 to 52,000 cars. I guess that's not many in the context of what big car companies push out there. But bottom line is that, you know, market-wise, this thing is up. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 89. NASDAQ up 17.5. S&P's up 7. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 89, NASDAQ up 17, S&P's up 6.5. And as we do each and every Tuesday, we have our man, Mr. Andy Hecht. And don't forget, folks, Andy has an outstanding show every Tuesday, Thursday, 5 to 6 Eastern Standard Time. As soon as I get off the air, you can get all the programming at TFNN, 8 o'clock in the morning to 6 in the evening, right on your cell phone, tfnn.mobi. If you'd like to get Tiger TV, just in your browser and your cell, folks, put tfnn.com. And what you'll see on the right-hand side, it says Watch Tiger TV. Hit that. You're off to the races, audio and video. Andy Heck, what's going on?
Hey, Tom. How are you?
I'm doing great, man. What's happening?
Good. Not much. Watching these markets. Lots of action all over the place. Oil way up today. Gold way down today. The dollar, marginal day. But I have a weekly chart of gold up here.
Yeah.
And I wanted to take a look at that with you. Last week, we made a bearish key reversal in gold. Last Wednesday, we went up to about 1183. It was above the previous week's highs. And then we closed below the previous week's lows. And this week, we're following through to the downside. So on the weekly chart, technically, and you know that I'm much more of a fundamentalist. But
sure.
Technically, to me, gold looks like it wants to go after this 1072.30 low from late July. That's on the weekly chart.
Yeah.
The daily chart today, we've come off pretty hard. We've had, I would say, moderate volume here. The one thing that's bothering me about gold, if you look at this area here of open interest, back when this gold rally started at 1103 or so on September 28th, open interest was, let me get that number for you, was about 418,000 contracts.
Okay.
So when the price went up, open interest increased, which is generally a bullish sign. It means more people come into the market, more buying. Open interest has come down a little bit on this dip, but we are still at over 450,000 contracts, which tells me that there might be some stale longs in there, and that could mean some more selling, because anyone who bought, the quarter closed, last quarter closed at about 11.15 or so, and we went all the way up about 7% in the first 2 weeks of the month, and this last 2 weeks we've come all the way back down, and now we're sitting, either side of unchanged from where we were on September 30th, but the open interest is higher, and I would reckon that that's some long positions in there.
Yes.
So, we'll have to wait and see. Silver did not come down as sharply. I'd say that the risk here right now is in silver for the next few days. Silver tends to, sit there, and then move explosively either up or down.
Right.
Silver closed last quarter at 1458. We're still sitting above there. We're sitting above 1500. We're at 15 and a quarter here. But platinum has had a really ugly kind of day. It really failed that $1,000 level, and we're down at around 965 again. So the whole complex looks a little heavy to me still, even after we've had this washout in gold. And, fundamentally, it's kind of telling me, hey, deflation. Copper is still unchanged from where it was at the end of the third quarter, which was a big down quarter for all commodities, copper included. But oil is bouncing here, and oil could be telling us, the shorts in oil got a little over exuberant. So I think that's the bounce. I think $50 is a key level in oil. But the thing that's confusing me the most is the strength in oil products today.
Yeah, I hear you loud and clear, man. I'm on the inflation front, man. To me, with the dollar, you probably heard me say, the dollar, no doubt last week, went higher with really nice strength, okay?
Yeah.
And when I'm looking at the commodity complex today, man, gold is down 1.6%, but we both know that's nothing, man. That's not a big deal. Hogs are down 1.4, cotton's down 1, cattle's down 1, silver's down 9/10, and guess what? Everything else is up. And they're up with conviction, man.
Well, I'll take exception with that. I think that the things that I'm looking at that are up today, sugar, first of all, coffee, cocoa, the strength in those commodities, first of all, those commodities have been sold down, with the exception of cocoa, brutally.
Oh, yeah, they all have. Listen, man, the commodity complexes got killed. I understand that.
But I think what's coming into the softs is not so much the inflation, is very much the El Nino, because people have seen what El Nino did to the price of rice. Output, we're getting very used to big crops in all agricultural commodities.
Okay.
And now with El Nino staring us down and, crazy weather patterns around the world, we're not going to feel it here, but they might really feel it in places like Brazil. And, Brazil is a huge producer of some of these soft commodities. They're the number one producer in the world of coffee, of sugar. And, sugar is in a bull market, in my opinion.
I know, that thing's been running, man. Yeah.
Next stop, 16.16 cents. We went through 15 with like a hot knife through butter today. It's been a nice, slow and steady rally. But the El Nino commodities that I'm looking at here, we got sugar, frozen concentrated orange juice, wheat I put into that category because wheat is produced all over the world, cocoa, rice, and perhaps coffee, which is yet to take off. I think coffee's the one to stick a toe in the water here, because that's probably the next shoot of fall to the upside in the softs. That's the one I like the most here. But when it comes to gold, I think gold got bought in August and September on this fear factor, and now the fear factor seems to be dissipating, and that's kind of knocking gold on the head here.
Yeah. See, I don't think people even buy gold for fear. I just don't. But listen, the bottom line is it got hit off that 1191. There's no doubt about that, man. Do you know what I mean?
Yep, no question, question. Listen, the one thing I can say that I think we'll both agree with is that 2015 has been a year for trading and not for investing, and that continues to be true. You can be bullish and get it right. You can be bearish and get it right, but don't look for those trends to get too far ahead of themselves, because those profits can turn to losses very, very quickly in this market situation.
Yeah, so let's get back to the inflation-deflation deal. So talk to me about deflation. Where do you think deflation is?
Well, I think we're feeling it from, first of all, China is slowing down. All right?
Yeah.
And China's been basically, the rest of the world is Costco to China, because they go shopping everywhere.
Right, no doubt.
And if they're spending less, then that's affecting the global economic landscape. Now, add to that the weakness in Europe, the economic weakness in Europe, which, I mean, we all know it's weak there. We all know that economy in general is really having a problem. And now, to add insult to injury, there's a tremendous amount, there's a humanitarian crisis there.
Oh, big
time. A lot of immigrants coming in, which is dilutive to that economy, which was already diluted this summer when they poured more money into Greece. And, you know, so it's one problem after the other there, and they just continue to slash interest rates. The other thing that weighs heavily on Europe is the sanctions on Russia, because Russia traditionally is their biggest trading partner. So all of these things together have created a very kind of an economic morass across the world, which has been deflationary for price.
You stay right there. Well,
sure.
Let's talk about what prices. Were we talking food? Were we talking? Andy and I will be coming right back, folks. We're going to talk inflation, deflation. Dow finished up 89, Nasdaq up 17, S&P's up 7.5. We're going to be right back, folks.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and let's go take a look at CERN, Cerner Corporation, folks. This is a healthcare solution company. Closed at $66. That baby is trading out at $59 right now. Numbers go like this. Their revenue is $1.1 billion. Their earnings per share was 42 cents. I'm not quite sure what they were supposed to. Well, actually, they made exactly what they were supposed to make, but they sold it down. We're talking with our man, Mr. Andy Heck. And, of course, don't forget, folks, Andy has a great newsletter. It's the Technomento Commodity Report. Another way you can get it, you come over to our website at TFNN, go to newsletters, go to trading newsletters. You can test drive that 1 month absolutely free. every Tuesday, Thursday. He's got a great show coming on right after this show right here at 5 o'clock. And we're talking inflation. So, Andy, I absolutely understand, what you're saying about deflation, because what happens is this, folks, okay? As China, as all these currencies keep going down, everyone's like running to the bottom, meaning that they want to sell goods at cheaper prices so we can buy the goods at cheaper prices. So I get that deflation part of the argument. Where I'm going with this is like, okay, what do we really use, right? We use food, that's going up. Depending, maybe not where you are, because, maybe there probably is. Real estate taxes are going up across the world. I just got my tax bill yesterday, and, it's big numbers, okay? That's gone up dramatically. The housing is going up. So people that are renting, that's going up every year. Now, this is going to be the kicker here. If I put a chart up right now of energy, right, of the oil market, right? Mm-hmm. When you look at the oil market, if we bring this back, and we did this before, I believe, okay? We have no doubt in the last year had taken a great advantage of how the oil market has come down, since $107, down to this $45 level. What's going to happen, however, is that come in 30 days, that is not going to help us inside the CPI, because, we were trading at basically, January. At January, we're trading at $50.
Right. We're basically unchanged.
So when I'm looking at that, I'm saying to myself, hold it, man. The stuff that you actually need is going up. And then the last part of that would have to do with Walmart is going down the tubes, but one of the reasons they're going down the tubes is that they had to go up on their payrolls.
One of the big problems when you talk about payrolls is that wages are not growing. That is one of the issues, and that also kind of weighs on the way that it's accounted for, inflation, deflation. So, you know what? Listen, we're at a time here. I think, we came through this 2008 crisis, right?
Yeah.
And they made money really cheap. And
it's still cheap.
And it's still cheap here. And it's cheaper in Europe. And it's getting cheap in China because they've cut interest rates 6 times this year.
Right.
But if you look at certain raw materials that are real basic building blocks, let's take iron ore, for example.
Yeah.
Iron ore slipped down below $50 again this week. I mean, that shows that there's real tremendous economic weakness and lethargy around the world. And I'm not just talking about in the United States. Certainly in the United States, taxes, real estate taxes are going up. That's true. All of this stuff is true. It costs more money to live. And by the way, did you ever notice when you go to the gas station, when the price of oil goes down, how long it takes for them to lower the price of gas at the pump? Well, the same thing is true about food. When you go to the supermarket to buy a loaf of bread, even though the wheat price has come tremendously down, the price of the loaf of bread doesn't come down so much because the profit margins and that's why corporate profits have been reasonable, because actually the margin between the cost of goods sold and the actual selling price, a retail price of these things has grown.
Yeah, there's no doubt.
So, basically you have big corporations are doing well as the price of their inputs have dropped. So it feels like inflate, and it depends, Tom, on where you'll measure it. Yes, if you're a consumer going to the supermarket, it feels like things are more expensive, and they are. It's costing you more money. But if you're looking at the raw material prices that I look at, the input prices. And this affects the other side of the coin, the producers. The producers are feeling deflation. They are not feeling inflation. Ask Glencore. They're not going to tell you they're in an inflationary environment, nor is Valley, nor is BHP or Rio Tinto.
No, I would agree there, okay?
Yeah.
But that is something that has been going down for 4 years. You could go back and forth whether they're off the bottom. But I'm talking about inflation as an end user has more to do with how the product itself will get priced up.
Right. And maybe what we're saying the same thing. Maybe what we're feeling is stagflation, because maybe what we're feeling
really
is
dangerous.
inflation, like you're explaining it. The consumers are paying more, and I agree with that. And deflation at the same time on the other side of the coin, where it's lethargy. What the economy is feeling is lethargy here. You can make an argument for both cases, but the problem really is that we do not have economic buoyancy across the world here, with Europe, with China, even here in the United States. We're growing moderately, but we're certainly not growing gangbusters.
Yeah.
So it costs us all a lot more money to go. I mean, it's a very, very difficult time, and I think that the chickens are coming home to roost for all the easy money policies. And I do agree that eventually the end result will be inflation around the world, but I don't think we're quite there yet. And I think we're still suffering from lower asset prices. When I'm not talking about stocks here, I'm really talking about raw materials, which are really the things that we use every day, and the production cost of them has gone lower with energy, which gives it more room to move lower.
Yeah, no, I hear you loud and clear. And now, so watch this, folks, because this gets really interesting. Because you can definitely make the argument here that the rich and the super rich, it doesn't matter what they pay for anything. But my take on it is that it does matter. Okay, so there's a story today, right? Vornado came out with their earnings today. Okay, well, Vornado, folks. Okay,
big real estate.
Yeah, it's a realty trust. And so you got to check out the story. This is sick. They just sold 14 condominiums that exceeded $50 million at 220 Central Park South.
Yep.
Okay.
Yeah, I saw it. I saw it.
And what they're saying, so check this out. This is what they're saying. 45% of the project's buyers are New Yorkers. Many of them who plan to make apartments their primary residence, the chief executive, Stephen Roth, said. About 30% of the buyers are from elsewhere in the United States. That's pretty intense, man.
It is. How many apartments was it total?
45% are gone. 45% of the apartments. So 14 condominiums sold at over 50 million. There is 118 units in the building.
Right. But what's that report that came out last week that the top 50 CEOs or something have more in their IRAs than the other 99% of the country? So something like that.
That's correct.
Right. Hey, there is a lot of money in some few hands that'll chase these premier properties and assets.
Right.
So, the question is, I ask you, why aren't they buying gold?
Well, because you can buy a lot more real estate.
That's right.
And you can leverage the real estate.
Gold? You can't live in the gold, right?
Well, you can live in New York City. It's a beautiful thing. Stay right there. We're coming right back.
Sure.
We're coming right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. We're talking about our man, Mr. Andy Hecht, and we are talking commodities. We're talking inflation. And as we're doing that, folks, Andy, U.S. Steel just come out with numbers. So U.S. Steel closed at $12.94. It's trading down $1, trading at $11.90. Let's see what they have to say. So they're losing $1.18 a share. Their net sales is $2.83 million. And they were supposed to lose 20 cents a share, and they lost 70 cents. So it's a big number, man.
It's a big number. Hey, remember that line from The Godfather? Hyman Roth says, hey, we're bigger than U.S. Steel?
Yeah.
Well, that's not too big these days. It isn't.
That's a fact.
You'd have to say now we're bigger than Apple, right?
Yeah, big time, man.
Let's talk natural gas for a minute.
Yeah, let's talk natural gas.
So you know, I heard you talking with Z.
Yeah.
In the last hour, and hey, natural gas has gotten croaked going into winter, which is a difficult time of the year. But I want to keep my eyes on these figures coming out from the EIA
Thursday, right? Yeah.
on Thursday. We are 52 BCF away from all-time highs in inventories. We still have probably 3 to 4 weeks of injections left. We might get up to 4 trillion cubic feet. You know, I think that's what's really weighing on price here. Now, we have room down to $1.94 where we traded on the November contract.
I know.
But, you know, I'm so tempted to stick a toe in the water here, but I'm going to wait. It's very difficult. The number of shorts is growing. We got open interest up to 1,032,000 contracts here. So the number, and you know, in natural gas will barbecue the positions eventually.
And
the question,
and you know what
maybe
happened?
it's not short enough yet.
So this morning, Tommy and I have been doing the morning show, right? And Dave from Clearwater called, okay, and he's the natural gas guru, no doubt. And, you know, we were looking at it, so I was watching it all day, and sure enough, that baby, you know, came into that 223 again. They did it with lighter volume, so it's like, okay, man, here we go.
Right. No, absolutely. And, you know, one of the signs you'll be able to see is if we do breach the all-time highs in inventories and there's no selling, that might be a really good sign.
So let's
to get
go. Walk us through what you said at the beginning about the BCF. So do I have this correctly that the storage is at the highest that it's been for a long period of time, and we're almost like filled? Is that what you're saying?
Right. We're at 3.877 trillion cubic feet as of the 23rd of October.
Okay.
All right. So that is about a 12% higher than last year. It's about 4% higher than the 5-year average.
I mean, if there's no more storage, I mean that it would still go down, right? I mean,
well, there's you know, the thing is that the all-time highs in storage is 3.929. That's November 2012.
Okay.
You know, it tells me these injections haven't stopped. I want to see what's going to happen if we go higher. There's room. You know, there with the Marcellus and Utica shale and low-cost gas. they're storing it somewhere, and they're filling up storage all over the United States. So let's see what happens when we actually make a new high in inventories, because I think that's what drew a lot of the shorts into this market and what really croaked it. So
which would make sense, right? I mean,
eventually
you
we'll
get a huge supply. Your bottom line is that, hey, man,
Hey, let me tell you something. I don't care how cold it gets this winter. We got enough gas.
Yeah, no doubt.
And by the way, El Nino's telling us that it's going to be warm this winter, which don't tell me that here in Vegas, because tonight it's going to be 45 degrees.
Is it really?
Yeah, it's cold.
Wow. And
it's cold.
We got
all week. And they're blaming it on El Nino.
We get the summer back here in Florida, man, for this week.
Yeah, I know. I heard. But I'll tell you, I have gas heat here in the house. I didn't put it on today. Okay. But I tell you, tomorrow morning when it's, 43, 44 degrees, I'll probably fire it up for a little while.
You better put it on right now, man. Start using some of that gas.
Good. Hey, it's keeping me awake. I'm not long. I'd put it on if I was long.
So the aspect, too, the gas price in the U.S. is not going to matter of what is happening in Europe, correct?
Right. We're talking about Henry Hub gas in Erath, Louisiana.
Yeah.
And it doesn't even matter what's happening in Boston, because that's a differential. We talked about that last week.
Right.
Doesn't matter California. We're talking about natural gas futures. That's all about Louisiana, Henry Hub, Erath, Louisiana. And that's what we trade. That's the liquid trading sardine. Now, if you're a natural gas physical trader, then you're trading basis. Henry Hub against everything.
So who uses the gas in Louisiana?
Well, that's all the South, all throughout Southwest. I mean, it goes from pipeline from there.
Okay.
You can, those pipelines stretch long ways. But that's the trading sardine. I mean, I know that the New York Mercantile Exchange is expected to open up a contract in the Pennsylvania region where, there's a lot of population on the East Coast, which will be more representative of the price for consumption, particularly during winter and summer. No doubt. Weather extremes, and that makes a lot of sense. But right now, all we can trade as in our position is the natural gas contract, and storage is full, chock-a-block. So it's going to be hard for it to run away. Do I think that it's going to go above $3 this winter? Absolutely. Do I think the market might have to get a lot shorter before it does?
190.
Probably.
I know. No, listen. When
190.20 is the target.
What happens, folks, is that when you do bring this continuous contract back, this has been a destruction in a huge way. There's no two ways about it. I mean, you bring this thing back, and you can make the case that in 2005. Natural gas was $15.78, and it's never seen that high. It just kept going lower lows. And, the last low was 190. Yeah, they just said 1.902, man.
Right, in April 2012. And quite frankly, if we look back to those days, we didn't have the reserves we have today. They didn't even know they were there, the Marcellus, the Utica shales. They didn't know how cheap the production was. We had infrastructure all along the coast, which Katrina and the other hurricane demolished. Oil prices went wild that year. So it's going to be interesting to see. But what's interesting to me is that heating oil is picking up, gasoline is picking up.
It was a big day out here today, man.
Big day in the oil products and the energy demand side. So we'll have to see if that follows through. And by the way, Tom, if we look back at the charts last January and February, it was those oil products that told us that crude oil was bottoming. I think also people are going to start to get flat around the OPEC meeting, because OPEC is always a strange.
That's right. I'm glad you just brought this up, because before you leave, I know you got to talk for another hour, so I'll let you go. But Andy, folks, is going to be doing a workshop. That workshop, folks, is going to be on November 19th, 6:30 to 7:30 Eastern Standard Time. Now, as far as subscribers, but you can go subscribe to his newsletter right now. You can test drive it a month, absolutely free. If you do that, you get into the webinar. So the webinar is Thursday, November 19th, 6:30 to 7:30. And if you can't make it live, folks, bottom line is that we have great technology. It'll be on your page for a full month. So if you can just tell them quickly what it's going to be about.
Right. I'm going to go through the market structure in oil, because the OPEC last year, they came out. oil trashed after the OPEC meeting because they kept production unchanged. Now, the price of oil now, it was $75 last year.
Yes.
And it was higher last June when they met. So now it's lower. And there's a lot of conjecture within OPEC. So there's going to be pressure from several OPEC members to do something because Iran is coming on the market with more barrels to sell each day. To do something because the mission of OPEC is to support price. So we're going to have to, so I'm going to go through market structure and everything and look at all the possibilities, the combinations and permutations coming out of that OPEC meeting, regardless of what they decide.
Come over to our website, folks. It's right in the front of the carousel. You can do it now. And, of course, stay right where you are, right on your cell phone, TFNN.mobi. Andy's going to be coming up in all of 10 minutes. Thanks, brother.
Thanks, Tommy.
Look forward to hearing you 10 minutes.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. Zillow just came out with numbers. Zillow closed at $30.99. That is trading at $29.75. This gets interesting too because they definitely beat numbers, but there's something evidently in this that the market's not digging. So the estimate was a loss of 4 cents. They came in with a gain of 7 cents. That's pretty intense. So we're probably looking at apples and oranges, not the same apple. Their estimate, third quarter estimate was 176.6 million. They did 176.8. Bottom line is that, let's see what they have to say here. So, yeah, right, their monthly revenue per advertiser Check that out. That's pretty intense. $402. That's up 20% year on year on a pro forma basis. It's a lot of money. Bottom line is that it's not helping the stock, though. That closed at $30.99. That's trading at $29.95 right now. And, you know, this has come off the lows. It was trading at $22 August 7th. It goes up to 35. You come back to... that's not bad. This is, yeah, you're coming back into sign of strength, which is at 29.31. We go back over to Tesla for a second. Tesla is popping after the close. Tesla did lose money. They lost more than they were supposed to, but bottom line, Tesla is trading up by $19. Tesla does have a 27.11 shot position in it, and that's 1 out of every 4 shares that have to be bought. Tesla would have to get up and over this 228. 228 is where Tesla came down hard on the 20th of October, as well as the 24th of August. We went from 231 down to 195 that day, August 24th. On the October 20th, you went from 228 down to 202. There's going to be a lot of numbers that continue to come out. CHUY. Let's go take a look at this one. This is a full-service restaurant concept in Texas, Alabama, Indiana, and Kentucky. This closed at $28.61. That's trading at $31. They're selling something. Let's see what they're selling. Okay, so this had revenue of $73 million. That revenue is up 15.8%. They beat by 3 cents on revenue. On let's see, bottom line sales growth 2.9%. What do they sell? What kind of full service restaurant offering? Authentic Chuy's, authentic Mexican food. So that's in the Mexican food business. They have some action, no doubt, in that business. We go take a look at AIG. AIG had come out with their numbers last night. AIG back down with some volume out here today, but it looks to me like AIG is going to hold this $58 level, $58.89 level. That's where this thing got croaked on the 24th of August. And bottom line, I suspect that's going to hold. What we are going to have out here tomorrow after the close, and this is going to be a big one for the NDX 100, is going to be Facebook. Facebook closed today at 102.58, down 73 cents. We'll see how this baby shakes out tomorrow. You know, after Google and Amazon just killing it and going topside, you know, Facebook is not set up the same way. But we know that, you know, this is another company that no doubt is going to take over the world, is continuing to take over the world. We'll see how this shakes out tomorrow. Right now, it looks to me that Facebook can get into about the 97 area. Right now, you're at 102. That's on the daily. You take a look at this on the monthly, and it can get a lot lower. So you stay right there, folks. I'm Mr. Andy Heck's going to be coming up next, growling and prowling with you. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking up right here tomorrow. Stay right there. Andy's coming right up, right on your cell phone, TFNN.mobi. Go get him, folks.